Hello, everyone. Welcome back to Go Broke Investing with Leon and Jiz. And today we're just going to be talking about, we talked about technical analysis before, but today we're really going to talk about some key indicators that you can use, especially if you're new to the investing game and maybe you just want a simple trick. This is something that I learned. I'm going to share my strategy, something that I learned very early on doing research, and then Jiz is going to show another indicator that he uses, and we're going to go from there. And I believe it's really helpful, especially if you don't have a lot of time to analyze stocks. Maybe you want to get into stock, and so you can use these things to help you do a quick analysis. So the first thing that I'm going to be talking about is the simple moving average. All right, and I'm just going to pop up a quick definition. I'm going to share my screen. Jiz, you got to let me, oh, here we go. All right, so what is a simple moving average? It calculates the average of a selected range of prices, usually closing prices, by the number of periods in that range. Okay, and then we're going to talk about why 200 days. What's the reasoning behind that? Well, in a separate article, both these articles are on Investopedia. The 200-day simple moving average is considered a key indicator by traders and market analysts for determining overall long-term market trends. So if you're like a long-term trader, this is definitely something that you want to use in your analysis. The other thing they say is that the 200-day simple moving average or 200-day SMA seems at times to serve as an uncanny support level when price is above the moving average, or a resistance level when price is below it. And so basically that's a bunch of fancy words, but I'm going to explain it here in a chart. And I'm going to go to one of my favorite stocks, which is Apple. I firmly believe everybody should hold Apple in their portfolio, simply because look at how many Apple phones and Apple watches are around. Apple's always going to be here, always going to be around to stay. All right, it's a strong stock. They pay a dividend quarterly, and I mean, it's just great to hold. So right now, what I like to do and what I researched and what I do is I set up a 1-year chart, and you can do this on your phone. You can do this with Yahoo Finance on your phone. Right now, we're looking at TradingView, but you could set up on Yahoo Finance on your phone a 1 year and set up an indicator of a 200 simple moving average. And so what we're looking at here is kind of key. This is over the last 200 days at close, we're looking at the price of Apple. And the unique thing here is when you're looking at like a bar chart, you see that it's erratic. It's kind of all over the place. But what this average does is it really just smooths that bar chart. So it looks like a smooth line going across. So what I want to talk about here is a strategy of entry, right? So when we were previously looking at the definitions, it talked about support and resistance. So as you notice over the last year, Apple's prices were above that simple moving average line. And as it began to creep close to that line, as you can see right here, a couple of times it touched the line and bounced back up, touched the line, and then it went back up. So what is the overall point here? The overall point is, if you hop on your phone one day and you see Apple had some bad news, they had a hack or something like that, and you pop open your chart and you see that Apple's trading below your 200-day average, that's a good time to enter and pick it up, because you know over time Apple's just going to come back up. They just had a bad day, or maybe they had a bad earnings call, and the stock price went down over time, over a few weeks, and let's say it touched the line or went below the line. Those are good entry points, because as you could see prior to and then after, Apple tends to trend above that line. So you're going to be making money in the long term. Again, this is like a long-term hold strategy. But even if you didn't want to hold it long term, if you bought here 2-3 weeks later, you could sell and you'd still be in the money. So it's pretty much a guarantee. This is not like 100% guarantee, but it is pretty much a guarantee that you will make money. And if you want to exit, 3 or 4 weeks later, take your profit and run, you can. But in the grand scheme of things, as we look at the 5 year, if you just keep holding and you bought at every time it went below the 200 line, or every time it touched, over the life of Apple over 5 years, it's always trending above that line. Now, Apple's had a stock split. So this right here is just indicative of the stock split. But the prices were much higher before that.
One thing I want to piggyback on what you said, right? So you're talking about a lot of times looking for entries when something negative happens that may have impacted negative news or that kind of thing. But also what we're seeing in the market the last few years is that the market was overbought, or some people are saying inflated. So how high can it keep going, right? And then one of the things that we've said in our previous episodes is that you can't expect it to just keep going up. At some point, it's gonna come back down. So if you miss the part where it's a good opportunity, right, you just have to be a little patient, because eventually it will come back down, and it usually comes back down to retest the SMA.
Yeah, that's an excellent point. So and I mean, again, if you're new to trading, this is really easy. It's just a really easy thing for you to do from the beginning, where it's not getting so far into technical analysis that maybe you're confusing yourself. It's just one indicator. Now, options traders and more advanced investors, they're going to be throwing all kinds of things and indicators at the chart, because they're looking to get in different positions at different times at a precise moment, and they're trying to pinpoint and time the market, which is just about almost it's pretty hard to do. And if you're just a traditional retail trader and you don't have time to watch screens all day and things of that nature, that's not something that you probably want to get into. But this was just something that I learned very early on. It was very beneficial to me. I would just pop open. I would see some stock that I like was having a bad day. I'd pop open the 200 SMA, and I'd see where it's at, and I'd say, looks like a discount, and I would buy it, and then go about my day. And it's just sitting in my portfolio, gaining traction. So, and one keynote here is with Apple, like I said earlier, they have dividends. I enroll in what's called a DRIP, dividend reinvestment. And so even when they're going down, you're still getting dividends all the time. And it's just buying fractional shares. So I mean, if it happens to go down and they issue a dividend, well, you got a fraction of a share at a better price than, which means you're going to get more of a share. And so over time that compounds. And this is a big proponent of Warren Buffett's strategy that he uses. I mean, he buys a lot of dividend producing stocks. So without further ado, I'm going to stop sharing and I'm going to hand it over to Jiz.
Yep. And one of the things that we talked about in a previous episode is with TradingView, you can set alerts. So as Leon said, you don't have to babysit your screen and babysit these charts. So you can actually set an alert so that when price comes to that moving average, you'll get an email or a text message, however you set up that notification, so that then you can go ahead and hit that buy button.
Yeah, that's actually a very good point. I did that recently with Tesla. You know, I charted it out, kind of looked at it and was like, all right, here's the price that if it hits this price, I'm going to buy it. And then I set it and forget it. And it was probably maybe a week later and I got an alert. I totally forgot I set the alert. And I immediately went in and bought Tesla when it hit that alert. So
Yeah, definitely, definitely. Speaking of Tesla, let me see if I can pull it up. All right. All right, so I'm gonna share my screen, and Leon was talking about the moving average. I'm going to talk about the Bollinger Bands, and again, resource that you can go to learn about these things, Investopedia, right? So we have this here. What is a Bollinger Band? Without getting too deep into it, it's a technical analysis tool defined by a set of trend lines plotting two standard deviations, positive and negative, away from the simple moving average. So when you set up your Bollinger Bands, you're on here, right? You can come up to this screen and you type in Bollinger Bands. It has a default setting with, oops, that's not the one I want. Get rid of this. There's a few of them on there that's already populated. I just want the generic Bollinger Bands. Here we go. So basically it creates kind of like a bubble around price, right? So the main strategy of Bollinger Bands, if you look at it, is that we have Tesla stock here. And when price comes to the top of the Bollinger Bands, we see that it comes back in. So the Bollinger Bands, kind of think of them as bubbles or rubber bands that snap price back towards the center. This center orange line here is the moving average, right? So the one basic strategy is if price is above the Bollinger Band and then price comes back to the line, the center line, and it doesn't drop below it, you can expect price to go back up. So right here, price went up, it hit the Bollinger Band, it came down, but then it came back up. So it didn't stay below the moving average. So if you were in this and you started seeing this form, by the time it came to here, and then you seen this bar, or what we call a candle, when this candle finished, you can come in here and you can see how high it went up, and it just rode the top of this, or they call surfing the Bollinger Band, until eventually it does come back down. So if you were taking a trade over time, this is a 1 hour chart. So each of these candles is a 1 hour move. So you can see at some point you want to get out. So as you start to see it losing steam, you can take your profit, right? So we've talked about different ways of taking profit. There's different strategies for that. But if we're talking about a stock, you could, whether you're day trading that stock or whether you're getting in for long term. So again, one of the things that you can do to go along with that is what Leon said, is support and resistance, right? So if we plotted a line here, this line, we can see price came up to this zone. We call it a zone because it's not like a finite line. It's a basic area where price halts. So we call it resistance. This is a ceiling. Price came back down and it finally broke above that ceiling. And then we can see if you took your profit here, and then now we come back here, price didn't come back down to this zone. Now we have what this ceiling became a floor. So now it's support for price, and we can see that price stayed above it, right? So if we're in this stock and you buy this stock from this point and you're saying, okay, I like what happened here. It didn't go below this moving average, this orange line. I'm gonna get in here. And then even when it drops, it doesn't drop below this point right here. You can stay in the stock because you're fairly confident. And then now the bottom of the Bollinger Band forms another support for price. So when you add different indicators, as Leon was saying, without going too advanced in it, this line is one form of identification to help me understand what price is doing in that area. And then the bottom of the Bollinger Band is forming another support for price. So when price comes to the bottom of the Bollinger Band, also tied right here with this line that I have here, now we have two levels of support, which makes that a really strong support for price. So it'd be very surprising if price dropped below this area. So if you were in this trade and you bought this stock around here, and then you see the bands moving up and you have this support line, you can be confident that you don't have to worry that price is coming down below here, unless like something major, like Leon said, some kind of news event, something catastrophic happened to Tesla that would make this drop below this point.
And one key point, I'm just looking at the dates there. The dates are right around the time that there was like a tech sell-off that happened within the last week, and it's starting to recover. But even in the sell-off, Tesla never went below the support that you indicated.
Yeah.
I think something that people might ask is it best to do this on a hourly
Well, I
scale?
would, yeah, we came on here on the hourly. I normally like to start on the daily or the 4 hour. And then as I start to see if I want to, if I like what I see and I'm thinking about getting in the trade, then I would come to the 1 hour and maybe even the 15-minute so that I can get as good an entry without as little drawdown as possible. But when I start my analysis, so when they come over here, we're on the daily, we can see that price had a big move earlier in the year. We had a lot going on with Tesla and it dropped, and now it's starting to recover. So it still hasn't come back anywhere near these highs. So that's telling us that it does have some room to come back. It has some room to come back up to here. And that's what you want, is you want it to come back here. So we see it. This is all upward momentum.
Yeah, and so Tesla did a stock split as well, and I want to say that split happened sometime in around that where the high is, and then there was kind of it fell off, and then what you're seeing there. I mean, if you just at the eye test, you're seeing slow and steady strength trending upward. You know, it's not super rapid like you would see in a volatile. It's just slow and smooth. I mean, that should indicate to you that it's a good time to get into Tesla. So you're on the daily right now, and you kind of jump between the 4 hour and the daily. Okay. Let's see. One thing that so is this something that they can do on like a Yahoo Finance? Is this something they could do on their phone?
You can, depending on what you use. There's Bollinger Bands is a basic indicator, so it should be on anything. If you can get moving averages, you should be able to get Bollinger Bands as well.
So I mean, seeing the bands and then seeing the moving average, would you use any of these indicators on crypto, or would you use something different?
No, it's the same strategies work. The same strategies work. So I actually had Ripple up on my chart until you started talking about Tesla. So I figured that would be a good one to use, but I use this for crypto all the time. Like you can see on my list here, this is all crypto. Basically, I have US 30 and oil as well. But no, because this is just measuring data. So that's the beautiful thing about this, and we've said it multiple times on previous recordings, is that when you learn this stuff, this is basically telling you what the information is. This chart, whether it's stocks, if you go here on TradingView, what do you have here? Stocks, futures, Forex, right? CFD, crypto, indices, right? The basic economy. So this stuff works because this is information that is charted over time. And then once you learn how to use these indicators, it's going to tell you whether you're seeing an opportunity or whether there's no opportunity if it's time to be patient.
So I'll say for myself, and then I'll ask you this question. I only use about 2 or 3 indicators. at a time, depending on what I'm doing. I mean, how many indicators are you using?
Me personally, I use maybe three at the most.
Because
Three at the most.
you can definitely you can confuse yourself.
Yeah.
You put too many, you'll talk yourself in and out of something really quick, depending on the indicator. So you gotta, when I started with one indicator, like I said before, and then I said, okay, let me research what other indicators are. And as I read the definition, I said, okay, let me look at that one. Let me look at this one. And I would add them. And if they didn't work together in my strategy, then I wouldn't use them. But that's why I said in season one, you will spend some money learning. That's the only true way, to learn, unless you're using like the play money. There's programs out there where you can, trade stocks with a fake account or whatever, like an account that's basically for educational purposes. So
Yeah.
but yeah, as he's got pulled up here, if you're watching on the YouTube, you could see there are so many indicators.
And the thing about this, is this is like everything else. Based on your personality, based on your
strategy.
understanding of math, of your understanding of economics, there's a different indicator that will gravitate to you. So Leon likes the SMA. I like the EMA, right? The exponential moving averages. I like Bollinger Bands. Somebody else might like the RSI, right? So it's nothing to say that one is better than the other. It's basically, what do you find as an effective tool?
What works for you? That's, to be perfectly honest, I've used that exponential before too. I took a class for options, and I read that in that class, a lot of options traders, they said exponential moving averages because they're having to like make decisions a little bit quicker. So that's basically it. But we thank you guys for joining us, and don't forget to check out our YouTube. We've been posting quick clips, just basically feedback of different things, different news articles, different just different news throughout the week that maybe we encounter, or we give a quick feedback on, or maybe a tip that we just saw that, we think that, hey, this is good. So check us out on Instagram, at Go Broke Investing. You can check us out. What's your Twitter, Just?
It's at Building GW. Oh, Twitter is at Just Clerk.
You can check me out on Twitter. I am at Mr. GW District. And again, you can check us out on YouTube at Go Broke Investing. So check it out. We'll be posting a lot more videos. We're very active now on social media.
Thank you.